Hey fellow traders, do you trade with candlesticks? Do you know how to trade with candlesticks? Have you ever used a candlestick chart and has it made you any money? Well, let's have a look at this, let's chat about this today and let's see what candlesticks are all about. What are the mistakes that you're making with candlesticks when you're trading? Do you know how to trade with candles and do you know what they're about? The hammer, the doji, the dark cloud cover, the three black crows and so on, all these pincer tops and that sort of thing. Now, don't get confused because the mistakes people make with candlestick trading is they confuse the patterns with the candlestick. Now, if you're trading on a candlestick pattern alone, and guys, if you want to know in detail more about candlestick patterns, do yourself a favor and simply type it into Google, get a picture, and it'll tell you, you'll get images with all the different pictures on it. And you can just use those candlestick patterns to your advantage in the market. But you have to keep one thing in mind, because the biggest mistake people make using candlestick patterns as a trading method is they forget that if you're on a 5-minute chart, the candlestick pattern that you're looking at or the candlestick that you're looking at is only valid for the next candlestick. And if you're trading on a 5-minute chart, in other words, that situation is only valid for 5 minutes or the next candle. After that, you get a completely different candle again, a completely different picture that you're looking at for the next trade. So I don't like candlestick trading as such to use that as the only method to trade with, because as you know, I trade with support and resistance, supply and demand, trend lines, and I kind of look at the price action and the pattern. So for me, trading with a candlestick itself is an invalid trade. It only trades for the next candlestick, which is kind of useless to me at the end of the day. If you're trading with candlesticks, there's a little method that I want to show you that will make candlesticks useful to you, because you do have to trade with the candles rather than a line chart. And there's a reason for that. I'm going to show you that. So I'll show you that in my method. But before we get there, remember, trading is a 50-50 game. And this is why candles are not the best trading method on their own. 50% of the time when you take a trade, it's a good trade. And 50% of the time when you take a trade, it might be a bit bad trade. That's just like throwing a dart at the board and taking a trade. You never know which way it's going to go. Trading is risky. 80% of traders lose money. And if you don't like losing money and you don't like risk, you shouldn't be trading. Rather don't trade. While you're here, guys, go down to my secret blog, get your free trade every day. It's just an idea. I don't give trading advice. The trade's there for you to enjoy, and it helps to get confluence from what other people are doing. Also, there's a free Forex book in the blog. It's in the index. It might also be in the description here, and it's on the side. It's at the bottom. It's available on the blog, and it's for you, and it's a free Forex book. Enjoy it. The candlestick patterns I always look at are, for me, I look at patterns where the candlesticks are showing me long red bars, long green bars. If they're showing me that there's a long leg on either side of the bar, which gives me an indication of the sellers are getting out or the buyers are getting out of the trade. Dojis, gravestone dojis, dragonflies, the 3 stars in the south, the inverted hammer, the hanging man, the shooting star. These are all candlesticks and candlestick patterns that you're supposed to know. You can go and learn all these patterns as much as you want. They're just going to confuse your trading. If you're a beginner and you get into all these candles, the one thing you've got to understand as a beginner is that if you trade on this candle, you don't know what the next candle is going to be. If you're trading on a 4-hour chart, for example, the next candle is simply the next 4 hours. And the one after that, it's really difficult to tell what it's going to be for sure. If you're trading on the 5 minutes, then basically your next candle is 5 minutes. You're effectively trading on a 5-minute candle, and that's it. I'll admit that there are candles like these dojis which will tell you there's a change in the market, but it doesn't always work. There you go. There's morning stars, evening stars, dojis, hammers. Look at that. The hammer didn't work. The next one was up, but then it did go down after that. So you can look at patterns like that if you want to, but it's just going to confuse your trading. Rather stay with a simple support and resistance. Now, what I do is I use the candles to look at the bodies and see which way the market is going. Look at the tails. If there's a tail, it means all the sellers jumped out here. And now, it didn't really make much of a difference to it carrying on going down, but it does make a difference in other areas. For example, here, all the sellers got out. It went up a little bit, but then it went down after that. That's why I say candles are great, but not perfect. Here, all the buyers got out, and it still eventually ended up going up, even though it went down a little bit. So I'm not a happy chappy when it comes comes to trading with candles on their own. I prefer to use our system. So let's just draw support level. I'm not going to go to higher time frames and draw it in properly. I'm just going to draw a simple, straightforward support level in here, just so that we can use it as a bit of direction here. Now, if you look at this, for example, what I use the candle for is here it goes in, here it comes out, big green candle. So effectively what you would want to do is take this trade long with the hopes that it goes straight up. But as you know, as I've told you, trading is a 50-50 game. Now, if you've done that on this trade, the green candle comes out. Clearly it closes. You have to wait for the candle to close. Then you've got a nice long trade and should go straight up. But did this trade actually fail? No, because your stop loss would have been down here below the support. So this would have come down and it would have been a failing trade. It would have mingled around here and eventually it would have gone into profit and gone up. So actually this would have been, even if you're taking the trade here, still would have been a profitable trade. So you wouldn't have been in the wrong taking your trade here. What you're looking for a bar that says to you, take the trade. The second place you would have taken the trade is on this closing bar. This bar closed in a positive above the support level. You would have taken a trade here, but it would have gone down again. But you wouldn't have lost. Your stop losses down here. It would have gone round and gone up. And then your third chance to take it, it actually succeeded. What you're looking for on the flip side is a similar situation. Let's draw something. Let's draw another one at the top here. Okay, is there another? Yeah, there's a kind of a resistance we can draw in here. So there's your resistance. So if you were looking to take a trade out of this resistance, it goes into the resistance, comes out, red bar. That red bar is clearly showing you, and it's closed, that it's a negative sentiment, and you would have gone short and taken that short there. The one thing that would have held you up is looking at all the sellers getting out over here. This long tail might have put you off a little bit, and you would have been a little bit concerned about that. But that said, it's a red bar that closed outside of the resistance, making it a good trade. And that's kind of where I use my candles. I will look at a doji because I understand the pattern, and I will look at evening stars, hammers, morning stars, all those types of things. If I spot them in the market, I will take note of them, but I won't place all my bets on that particular pattern because that just confuses the issue. It's a bit like putting too many lines on your chart at one time and just simply confusing the issue. So stick to looking for the green. The shaven head at the top is really important. If you get a flat head without a tail, you know, that's really positive, for example, on a green bar and opposite on a red bar. All I look for effectively is the size of the bar and the tails. Look, it's difficult to trade on a line chart, so these bars give you good confluence as to where the market's going and how far it's going, and it also helps you when it goes into these levels as to when it comes out, what direction it's closed in and what direction it's going in. That's what I use candlesticks for. Also the pincer top, when there's two fine little pincer tops at the top, that also tells me a lot, and it helps me identify the double tops, double bottoms, triple tops, triple bottoms a lot easier than with a line chart. As you can see them, they stand out. That's really all I use the candles for. It also shows me a great picture of a lot of red or a lot of green, and you can clearly see where the trades are going. The trend is up, the trend is down. So when it comes to using candlesticks, don't make the mistake of only trading on the candlestick by itself. Make sure you use the patterns, make sure you use the support and resistance, make sure you use supply and demand. Yes, use candlesticks, understand what they're about, but only use them as a kind of confluence. So if you see a pattern, or if you see a candlestick that's maybe showing you a doji, or maybe showing you three black crows, and you pick up on that, use that to your advantage and say, well, I'm actually taking the trade the wrong way, or I'm taking the trade the right way. It'll just point you in the right direction. Don't only use that as your trade, but understand them a little bit, and it will help you use the candles. But using candles on their own for trading, a lot of people do it, but I find it rather difficult just to do that. I prefer to use them in confluence with what I'm doing, and understanding them just helps you see the bigger picture when you're trading in the market. So guys, thanks for watching. Don't forget to watch the last video. Until next time, cheers, bye.